Hello everyone and welcome to our latest episode of Market Bites. Good to have you all with us. Remember to like, share, subscribe, all that jazz. Check out the Daily Voice each morning where I talk a little bit about the markets, a little bit about football and golf as well, all in under 5 minutes. So do check that out as well. Been a fascinating July. Obviously we're in the penultimate day at the moment. Some incredible moves have taken place this month and today. There's a particular stock which we'll talk about, which is having its best day as it stands since 2008. I don't know whether that's a good thing or a bad thing. Before we get into everything, let's find out how the wonderful team are doing. Neja, first of all, how are you?
Hey Sam, hey Brett. I'm doing well. We already spoke about the heat wave. Here we have a heat wave and it's extremely hot. But other than that, I am into all of the earnings report that are out there. We have Meta, we have Microsoft, we are expecting Apple today. So it's a huge week for earnings. So yeah, that's what I'm doing these days. And what about you two?
Yeah, I mean, it's an incredibly busy week, and you mentioned some of those earnings there, which we'll absolutely discuss. And also the heat wave. I mean, I'm also experiencing it, and whether it was last week or the week before, and as you mentioned the stat about how many homes or places in buildings in the UK have aircon, and it's not many. It was like 4, 5, 6%, whatever it was. And it means we can still complain about it because it is too hot for us here in the UK and certainly parts of Europe as well, where it's not really a problem in America. Everyone's got AC, as they call it. I think we're in Europe, it's very much aircon. But enough of that. Brett, let's find out how you are. How you doing, mate?
Yeah, doing good. On the aircon front, it's like I've been here for like 12 years in this part of Michigan. The first half, never thought about air, never needed it. And so I don't know if it's just actually getting hotter or if I'm just getting older and my tolerance for the heat has gone down. But we added aircon like a couple years ago and it's been a game changer.
Yeah, for all my mates or a few of my mates that have aircon, they can't believe their luck at the moment. It just gets hotter and hotter for longer here in the UK. One thing that hasn't been too hot has been the market, and certainly the tech side of that and chip stocks, which have had a rough time of it lately. And we have a catch up every sort of couple of weeks as an analyst group where we're all in it. And last Thursday was that time, and we've had the feeling that there was still a bit more room to go to the downside, and we have another catch up on early Monday morning. Brett, obviously way too early for you to join that one. 9 a.m. UK time is probably like 4 a.m. So no one expects you on a Sunday evening to join. But again, it was similar kind of vibe where we thought, Nasdaq looks a little bit heavy. Semiconductors look a little bit heavy. These chip stocks, maybe there's a little bit more to go. And that's really been the case over sort of the first 3 days of the week. But also when the Nasdaq was down 10% from its peak, the S&P equal weight was at all-time highs, and other indexes have been as well, the FTSE 100 for example. So it's been a fascinating period, but certainly for those Nasdaq watchers, those QQQ watchers, July is historically a good month, and it hasn't been so far. But before we get into a little bit about that and some of the big tech earnings that have come and are about to come out, we can start off with the Fed. Now, Brett, they kept rates on hold yesterday, but that certainly isn't the whole story.
No, it's really not. This is Kevin Warsh's second run at the 6-week Fed meetings, second Q&A session with him, and it's like getting used. There's like some growing pains, I think, with having a new communication style from the Fed. We had Chairman Powell for 8 years. He was a very telegraphing type of chairman. They let us know well in advance, essentially, whether they said it directly or indirectly, like reading through the very easy to see lines. We kind of knew what the Fed was going to do ahead of time, whether they're going to cut, whether they're going to hold, or whether they're going to raise. It got to the point where the the actual rate decision was just sort of like a formality, and the press conference was really where the focus went, because that's where they gave sort of like the next level of forward guidance, if you want to call it guidance from the Fed speak. But we essentially have the opposite approach here, where Chairman Warsh wants the market to sort of react to the realities of what the Fed is doing on the interest rate level. They want to get away from the guidance. He's not even a dot plot guy. So, they have a completely different style. The market's actually taken that, I would say, mostly in stride. The market has not really done great since the last Fed meeting in June. Or I shouldn't say the market. Tech has not done well since the last Fed meeting. The rest of the market's actually held up pretty well. Sam, you mentioned just briefly while we were chatting, like the equal weight S&P recently hit record highs, whereas the NASDAQ's teetering on correction territory. So we do have like bifurcation going on within the market, but we'll touch on that in a bit. I'm assuming when we look specifically at the Fed, yesterday's reaction, not great. But we had like a lot of geopolitical stuff going on in there. We had the first of 2 out of the 4 Mag 7 names in 2 days reporting, and half an hour after the presser ended. So a lot of moving parts in there. Markets were reacting great today. Maybe a bit surprising to me. The Fed to me still leans hawkish, even though they're not hiking. They keep saying that inflation is like basically their top priority as inflation continues to move higher here. So at some point, either the market's going to force the Fed to hike, or the Fed will have to react to the data, which will tell them to hike. So unless we get a moderation in inflation, unless that kind of calms down. So there's like a lot of moving parts, I'd say, with the Fed, and the market's, I think, reacting kind of in kind to that.
It was interesting to see, because there was this diversity among the policymakers, because we saw that 3 of them actually voted for rates to increase. So that's something interesting to keep an eye on, because just a few months back we were discussing rate cuts. Now debate has moved from when the rates will fall to do they need to go even higher, and of course that's all depending on situation with inflation, the markets, and so on. But it's definitely interesting how debate has switched from to completely different story from what we had in the beginning of the year.
And the market's taken that in stride. The fact that we've gone from talks of rate cuts to hikes, the day-to-day around the Fed meetings, we may have volatility, but largely speaking, to see like small caps holding up well, equities trading pretty well, on the idea that we've gone from cuts to hikes is really something. It's pretty impressive, I think, in my view, and maybe it's more of an earnings story than an interest rate story in that particular instance. But it's nonetheless it's resilient.
A little stat for you both, and today's move I'm not including in this, but from the last 10 FOMC meetings, 80% of that time, so 8 out of 10, the Thursday move reversed whatever Wednesday did, and that, touch wood, is going to be the case today, isn't it? It was a bit choppy immediately on the press on the announcement and the press conference, but we did finish lower near the lows, and some of the moves higher today have been pretty incredible, actually. Very big, certainly in some individual stock names there. But yeah, I what we got now until sort of mid-September. I think they meet on the 19th, so 6 weeks or so, 40 odd days, maybe a little bit more. It's a long time. Anything can happen. Get through this earnings season, see what happens with oil prices. Geopolitically, there's going to be plenty of headlines that come out and data points, non-farm payrolls next week, a couple of CPIs you'd imagine in the build up to that meeting. So I think it was the right thing to do, not to raise. Not that we were expecting that anyway, but I imagine on this podcast we're going to be talking a lot about that percentage chance of a hike changing quite a lot. So yeah, I think it was there's a lot can happen, can't it, Brett?
Yeah, I think that's really my main takeaway. Like, coming into this event, it wasn't expected that there was going to be a hike, but there was still it was like a 33% chance that we were going to get a hike. That's like a level of uncertainty we haven't seen in a really long time going into these events, going into a Fed announcement. And I suspect that will be the case really for the next couple of, the next September meeting. Obviously the emphasis is going to be on a hike, but eventually when we start to get into will they cut or won't they cut, I think that will eventually return back to a rate cutting scenario. But either way, there's going to be this uncertainty going into these events of what the Fed's going to do. And when uncertainty is there, that opens the door for volatility, and that can be short term pain, but long term gain situation. There's just a lot of things that can happen with that.
Yeah, it did feel like yesterday's meeting was one of the most anticipated by a lot of people online, and a lot of people were excited about it. And as you both mentioned, Walsh early doors in his career as the Fed chair, power did 8 years. It's mental, isn't it? I mean, that flew by, which is also scary for me. I mean, I also remember Janet Yellen, and when I was day trading, multi-assets and the S&P 500 futures and Euro USD and T notes, and I'd be tuning in, waiting to hear what Janet Yellen said, and it was good times back then. Right, so that happens UK time 7:30 p.m. last night, a bit earlier obviously for you, Brett, a little bit later maybe for you, Leisure. That happens, but then an hour and a half after the press conference starts, we have two big earnings out. Were you keeping a close watch on those, Neja, or was it more just wake up the next day and see?
No, whenever we have those big earnings, I always wait for them to be out to see initial reaction and also the main numbers to be dropped. And it was a clear move. Microsoft skyrocketed up, and then Meta just dropped heavily. And it's interesting to see these big AI companies taking those different sides of the coins, because but yeah, the story is clear why it happened, because Microsoft presented a huge move that they're not just spending, but they're also capturing all those expenditures that customers are in here. And Meta can say that AI is improving recommendations with ads and all of that, and also making conversion better. But it's much harder for investors to say that, oh yes, all that we can contribute to AI. But while with Microsoft story, we know how many people out there are already using Copilot and they're paying for it. So it's a much different story. And what really hurt Meta was that free cash flow, which dropped significantly, 91%. So it was a significant drop, and they're still massively spending on AI. And yeah, I think that's the main part of the story, because investors, they just don't want to see just spending anymore. They want to see how these numbers are bringing more money into the companies. And I think that's the main reason why we saw such a different reaction in both of the companies.
Yeah, I'm with you. I mean, you get punished. We've seen that, haven't we, over not just this quarter, but to be honest, for the last sort of 2, 3, maybe even, going back a year ago when that sort of transition happened. Okay, you're spending all this money, show us results, and Meta got punished. Brett, I mentioned the stock was up the most it's been in a single day since 2008, and I don't know whether that's a good thing or bad thing. Does that worry you, or do you think it was a good report, and the market's having a day as well, so that helps to it, and it's there's always a little asterisk next to that?
Yeah, I actually don't think it's I don't view it in a spooky fashion. I would say, you guys are totally right when you're looking at how the market is handling, especially these hyperscalers, but earnings reports in general. It's like, if you can't just beat the headline numbers, you have to have a real tailwind behind you. You look at something like Meta. To Neja's point, I guess I won't reiterate the same thing she just said, but it's exactly why the stock is down today. You look at something like a Microsoft, and they're still spending really heavily, but they're making that investment, and then they're turning right back around and turning it into revenue. Their free cash flow is positive. The money's still piling up in the bank. It has the fundamentals there. And Sam, to your point on the big move today, I don't know if these gains will hold. So far, we're a little over an hour into the session, clocking a 15% gain. It hasn't given back that morning jump. So promising start to the day. We'll see how it finishes today in the week. But, when you look at its valuation, Microsoft was on an earnings basis a very, very cheap name. If investors start to have that faith that this company is going to string together multiple quarters of turning that investment right back into business. And that was what really lit these hyperscalers higher. You go back a couple of years ago when they started making these big AI investments. Of course, they don't seem very big anymore compared to what they spend today. But, there was like this hype, this hope that they were going to hey, they're going to invest this much money into, buying GPUs and they're going to make money. And then there was this question of wait, are they making money? And that's where we saw so many, Microsoft included, all these names come back down. It's very much turned into a prove it story. And that's why we're seeing Microsoft react so nicely today. And even Amazon, I think, is up 4 or 5%, catching a little bit of a lift. Maybe investors speculating that they'll report a similar thing, similar number tonight. Of course, we'll see. But very much like a prove it situation with the hyperscalers.
And I think that, Meta reacted negatively today, but I think that anyway, in couple of quarters, or a couple of quarters, not just one quarter, but at least few of them, I think that they can prove that they are right, because their advertising business, anyway, it reaches 3.5 billion people every day. So that's a huge number, and they have extraordinary distribution, and no other company in the world has anything like that. But the only issue is that Microsoft, for now, it seems like they are already getting this money from their investment back, while Meta is still waiting. Waiting to prove themselves out there, and investors just want to see the numbers, and we just can't wait for the proof any longer, and they need to deliver.
Yeah, I'm with you. Sorry to interrupt, Brett. It's not quite a 2022 vibe for Meta yet, where we had that big drop and things start recovering. But I'd be wary for people trying to bet against Zuckerberg. He's got a history of turning everything around, even when the chips look down. So I'm with you, Nezha. I think in time the results will be there, but the market is punishing, isn't it, at the moment? So it is what it is. But at some point when they do turn it round, you'd imagine there's a decent opportunity there. I would say. Brett, was there anything else you wanted to add on that?
I think generally speaking, to see this sort of scrutiny from investors towards these companies on the financials is such a healthy development for all the talk we hear about comparing this to the 2000 bubble. We have a lot of scrutiny and pretty relatively reasonable valuations on most of these names. Just to put that aside, a lot of scrutiny on these numbers. And we started to see this a couple quarters ago in mega cap tech and in the names like Oracle, some of these hyperscalers. We do see this rotation from Mag 7 often, where there's this, right now Apple's the loved one. And now it's the NVIDIAs, the Metas, surprisingly NVIDIA, but NVIDIA's Metas, they can't seem to buy any sort of bullish flow. But I think their time will come. We see this rotation, but I think overall it's healthy to see scrutiny from investors on the financials here.
Yeah, I'm with you. And do you remember? I reckon it probably been the last earnings where we reviewed NVIDIA, and it was a phenomenal report. They didn't go higher, or they might have spiked higher and then gone down. And we said in the follow up to that, of the review of it, that maybe the next big move with NVIDIA is actually when it comes under pressure and just comes to a level where new buyers want to come in, and maybe that's what we're going to see. And I also don't think that's the worst thing in the world there. But great day for Microsoft at the moment. You mentioned Apple there. They report tonight as well. Biggest company in the world. I'm not sure how many people saw that coming a couple of months ago, overtaking Nvidia. Incredible. And it wasn't too long ago they of course mentioned that they're going to hike the prices of some of their products, which was initially met with a bit of a negative reaction across the market. So demand will be interesting to keep an eye on there. Nezha, is that going to be the main one you focus on, or both of them, both of the big companies?
I'm really interested in Apple, but that's for a different reason. I'm really interested in it because it's not part of this AI race. Meta is, Microsoft is, but Apple just avoided that at all costs. They're really cautious about it. And as we at first thought, this is a huge disadvantage. Like if you're not into AI, you're gonna lose the game. But I think that we should start talking about how big of advantage this could be for the company. Because anyway, yeah, they're not spending all this money to develop new AI models and so on. But maybe Apple won't even need their own one. They will just use the best one out there, and they won't spend all this money on it and focus on other stuff and be like the best in it. And yeah, I think that this strategy maybe has clear benefits. Because yeah, it protects free cash flow. We saw how important free cash flow is with Meta, and it avoids spending billions on data centers, for example. So yeah, of course, there is a risk involved as well, because if they're too dependent on AI models that aren't theirs, like companies like OpenAI and Google, and if they fall behind completely, completely behind their competitors, that's obviously a huge disadvantage. But I like how they're playing this race, that they're just waiting for others to build up the best possible models, and they will use them. I would really like to see what their plan is.
Yeah, bring it on.
I mean, I think that's such a good point. They've intentionally sat out this like the spending race in AI, and this is expensive. I mean, this is not like a one-time, 50 or 100 billion. This is like a perpetual. These guys are dumping so much money into this AI build out. So to see someone from kind of the beginning say, I think we're just going to wait this out. We're trying our own AI thing, but like you said, we're going to piggyback the best model and just go from there. Apple does hardware really well, and then they gatekeep this sort of like, they have to go through the App Store and all these. They have so many ways of making money through services. It's such a sound, strong business. And now it's funny because, like you said, Nezha, this was like Apple was sort of an unloved Mag 7 name because they weren't investing in AI. And now it's the opposite. Now they are loved because they're saving all of this money. So it'll be really interesting, I think, long term to see how this plays out. I'm also curious if we'll get any like succession plans around Apple, how they may be like looking at that going forward. We've had such great leadership from that firm. I'm curious to see if they have anything else. And then, of course, Amazon will be an interesting one.
Yeah, just on Apple, someone posted this earlier on X. I haven't fact checked it, but they're a pretty trustworthy person, so I'm gonna believe it. And they were saying Apple is now reaching its richest valuation from a PE ratio since 2005, and the iPhone, the first iPhone, wasn't even invented then. So what they've done with the capex and the AI spending, you have to take your hat off. You have to say well done. Biggest company in the world, they've clearly performed and made the right decision there. I do wonder how many medium longer term investors are maybe just de-risking a little bit ahead of this result, taking a bit of profit maybe, just to sort of just be a little bit cautious on those valuations. But we'll see, of course, what happens tomorrow. The two big companies, two Mag 7 companies that reported last week struggled, didn't they? Tesla came under big pressure as well. So yeah, I'm looking forward to seeing what happens today. There's been some other big moves in the market, and I guess we can just discuss the vibes at the moment. Also, another thing, the Bank of England kept rates on hold today, very much expected. It was supposed to be expected to be a 7-2 split. 7 on hold, 2 for a hike. It came in at 6-3, so you'd have a bit of a hawkish tilt on that, and maybe seems a little bit like they're just sort of delaying the inevitable, and they're going to raise at some point. But the FTSE all-time high, as I mentioned, in a period where equity markets elsewhere have struggled a little bit, less tech companies in that, and a few oil and gas companies as oil has recovered a touch. I don't know if I imagine both of you have seen it, but the Kospi, the South Korean stock market's had a rough few days, isn't it? Down something like 40% from the highs. Nezha, I'm not going to ask you to talk about the South Korean stock market, but I just want to get your feeling on the current feel for the market. I mean, the fact that, and we've mentioned it a couple of times, that the equal weight S&P is at highs, does that give you a little bit more, I don't know, relaxation that, whilst the NASDAQ and chip stocks have been struggling, albeit having a great day today, Do you feel like actually what we're seeing at the moment is a little bit, it's almost healthy?
Yeah, I think so. I think it's healthy. I think that we saw this huge like boom in all chip stocks, and now they're under pressure. And I think that's just something healthy because nothing basically lasts forever. And when you see equal SP 500 at all-time highs, you can see that other sectors are performing better, and that not everything is actually under pressure, as it maybe seems on like when you open the first news in the morning. But yeah, of course, we know that also if a whole market comes under pressure, we know that that average pullback each year is around 14% for SP 500. So I think it's totally healthy and something that's inevitable.
Yeah, Brett, you similar sort of vibe that you're feeling at the moment, or maybe closer to panic?
100% similar vibe. I mean, I was feeling like in Q2 it was unhealthy. I don't want to say it was unhealthy, but it was like the semis were doing all of the work, and you had all these other sectors that were doing. The businesses were doing well. The valuations were in many cases actually leaning on the attractive side, and they just like weren't participating. I don't like markets with the narrow participation. Like you go back 3 years ago, it was like the Mag 7 and Eli Lilly doing all of the work. It was like, this doesn't, I mean, it turned out fine, but it was like, this doesn't feel good. This doesn't feel right. It doesn't feel healthy. It was similar now, albeit a little bit different because there's so many chip stocks participating, but it was like the semis were up like 90% in Q2. It was a record quarter, best quarter ever, as it should be, 90%. But all these other names were not participating. And now we have financials, industrials, healthcare names. We have this group coming back to life. And I think that's a really good thing to see. Now, of course, it's unraveled those gains maybe over the last 6 weeks. The semis have unraveled, and we've seen equal weight do even better. But you look at today, and it's more narrow than it seems, Sam. I mean, Nasdaq's up like 3%, but it's semis and Microsoft doing most of the heavy lifting. I think like 8 of the 11 sectors are lower. Equal weight S&P's down 1%. So there's weakness there. We'll see how it shakes out, but yeah, I think overall it's so much healthier to see more participation.
I
Yeah, I'm
think
with
that
you.
our rebalancing webinar that was one in sometime in June, but it was
Yes.
really on point because rebalancing of portfolio is such an important topic to talk about, and for people who were very exposed into semis, like to lock in those gains and to expose more in sectors that were not performing that well, but now they're finally back in the game. So yeah, I think that rebalancing is something that every investor should think about at least a couple times in the year.
Yeah, June the 9th that was. So not to blow our own trumpet, but it's pretty bang on. Maybe the analysts at eToro do know what they're on about after all. We'll wrap it there for today, guys. But as always, thank you so much for joining.
Thank you.
Yeah, look forward to the next one. Thanks, Sam.
Take care, guys.